Hello.
Hi, welcome back after 2 weeks of break. And yeah, let's Happy New Year. Hopefully not too late to wish everyone Happy New Year, even though it's already the 7th. But of course, this is the first day of the year, and yeah, we are back after 2 weeks of break. And I hope for the past 2 weeks, you guys have been enjoying your holidays, taking a well-deserved break, and yeah, hopefully it was a good new year. But nevertheless, as we all know, even though it's a new year, based on the calendar, we just uh, switch from 2020 to 2021. Some things just don't switch off that quickly. We are still in the middle of a pandemic, and of course, if you look at the condition in Malaysia, it's getting worse. Today, I got a shock when I just saw that the numbers actually breached 3,000 cases of new cases a day. So yeah, new year, but same old problem, and sometimes the numbers of the new cases that Malaysia is actually experiencing now is just not that good. But nevertheless, we want to start off the new episode of Not So Late Night Show on a good footing. So, what not better to start it off with a relatively good company. This company, if you guys have been investing for quite some time, you would have come across this company. This is a company which has track record and proven that it is able to grow. It is able to return to shareholders dividends and capital gains as well. So yeah, I think it's better for us to start the first episode with a good company, and then as the future episodes come, then we can look at more interesting stuff. So yeah, let's catch up a bit. So yeah, hi EC. Yes, good to see you guys. Good to see you all back as well. Hi Darren. All the questions come first. Okay. Okay, I think you have a very good selection of questions that I think would be very beneficial and more useful after we finish our sharing. But I'll just read it out. So later we will touch on it. So your first question, what is your take on the current valuation of Scientex and Tiguan? So Tiguan as in Tongguan. So yeah, okay. Later we will do a brief comparison between Scientex and Tiguan, and I'll give my opinions, and maybe you can also give your opinions as well. And number two, any companies in Bursa that have businesses on a global scale, like glove manufacturers. So later, let's see, does Scientex have international businesses or not? Let's see for Scientex first. Then, of course, I will also pick my brain and see whether they are. I think they are definitely they are. There are also a lot of companies that are having business all around the world, global businesses lah. Say for example, you know, like for example, Sabah Dynamic is having projects in Malaysia and also in the Middle East as well. So consider global business. Yinsun also having their FPSO park all around the world, together with leads to a few of the international oil companies as well. So yeah, there are Malaysia companies listed in the stock exchange that has global businesses. So have faith and be proud of our Malaysia listed businesses lah. So last but not least from you, what are your best and worst stock selection in 2020? Okay, good questions as well. Later I'll also answer this. So yes, Francis, hello and happy new year. And yeah, maybe I'll just come back to the company of the night, which is Scientex. But let me get Junbing's opinion first. So, what is this company to you? And after going through it, what are your initial thoughts? Having such a company in Malaysia that is in the plastic film and also a property development business.
No, I think if you went through, as in you study them and then it's quite impressive. They did quite well in this plastic industry, and they managed to crack their way through into a field that totally no linkage, because you won't be building a house using the plastic. So it's totally a new division, and they are able to set up the division and make positive return from time to time. So it's quite impressive in my opinion. But then I also have question mark lah. Usually, big company tend to do a lot of consolidation, trying to be the monopoly one. So they will do something related, keep on expanding. So for example, QL try to go from the upstream go to downstream by opening up family mart so that they can sell the thing through the customer end channel. So all this seems make a lot of sense, but then when you see Scientex is totally two different pillar, not so related, but it's bringing them some good returns from a year-to-year perspective.
Mm. So yeah, I think when I first studied also, I just noted that I think when Scientex, they started off with plastic film, and then only they went into property development. And at that time, I was like, both of these business, usually companies will go into business that have linkages or synergism, we call it. So for example, just when you talk about QL, they were always in the protein business, chicken, seafood, and then suddenly you come up with Family Mart, and then I mean, it's just very normal. Like you come up with Family Mart, you take the franchise, and then you just have the raw materials already, and then you just pump it through the so-called all the existing franchises or outlets that you're opening. But for Scientex, totally no linkage at all. You cannot build houses with plastic films, and vice versa as well. The property development will also has nothing to do to synergize with the plastic film company business. But yet, the company has managed to just grow two pillars and qualify as a conglomerate. So yeah, I think let's proceed. And before we proceed, it's a new year, and happy new year, guys. For those who haven't heard our wish. So if it's your first time here, yeah, do follow us on our social media platforms, Facebook, YouTube, and Instagram. And finally, KayaPlus is coming up with a new premium content. As it's a new year, and sometimes we keep asking ourselves, so it's a new year, what are the stocks to look at? What are the stocks that I should keep an eye on to invest or to actually put in my watch list and to further monitor? So we also have, KayaPlus also have our own top 10. We will be sharing with you guys if you are interested. It's a one-time off fee of 88 ringgit per pax. So if you just divide it by 10, it's roughly 8 ringgit, 80 cents per stock. Or if you divide it across 365 days for the year, it's just 24 cents a day. And yeah, for me, it's I don't want to make things too pricey or out of the reach, especially for people who wants to just kickstart their investing journey. So we think that, yeah, something around below 100 would be a very approachable figure to actually kickstart our sharing with you guys. So it's a 2-day session, and it's going to be roughly 5 hours each for each day. So it will be at the 30th and 31st of January. And of course, in the middle of it, we will have some lunch break and some rest as well. And then, of course, there'll be presentations as always, and together with all the questions that you guys might ask, then we will try our very best to answer as well. So let us know in the comments, or you can PM us if you are interested. And if you have any other questions, let us know also. We will actually answer your questions after this sharing. So as always, the disclaimer, I think now and more, the disclaimer becomes more and more important since Securities Commission Malaysia come out with a new ruling that any activities that we online sharing that gives a call, whether it's to buy, sell, or hold securities, you will be under scrutinization, and there will be a hefty punishment. So as a viewer, try your very best not to ask us tough questions that will make us break the rule. As for us, we just, it's just sharing purposes. We are not advocating you to do any decision whether to buy or sell or to hold any securities mentioned or discussed in this whole session. So yeah, finally, to the main company of the night, Scientex. So yeah, maybe I'll let Chun Bing start it off. What is Scientex all about, and what in detail what is the business all about?
Yep. So like what we mentioned in the earlier sharing, so it's quite straightforward lah. There's two different separate pillar. In terms of plastic, this is where they get started with, and then they are into a lot of plastic manufacturing kind of products. One of the key one is what they call the stretch film. So what does it mean is basically I think that the most easy example is when you go to airport, but of course now you cannot go to airport. If you wanted to wrap your luggage so that you won't get scratched, so there will be some service in there to help you to wrap with some very thin plastic. So this is one of the major product that come under the plastic division. But of course, they cover quite a fair bit of it. Later you'll see the whole catalog. And then the next part is in the recent years, they go into this affordable housing kind of property development. And then they started their footprint is actually down south, mainly in Johor, and then managed to actually crack through this division. And now they have different affordable housing township in Malacca, KL, and so on. But majority of it are still in Johor. So this is the two things that they did. Maybe you can go to the next slide.
Okay, yeah, so I think some interesting facts. Yeah, Chun Bing, you can continue.
Yeah, so it's just a quick information lah. So they are a very they already in this industry for very long. Even got listed back in 1990s, so long ago, and they also survived through the 1998 crisis, 2008 crisis, and they're still here. Cracking their head into a totally different industry and still making profit. So this is some of the thing that coming in. And then one of the key things I want to highlight is they have 19 manufacturing facility across different places, including very far in USA. So Scientex should be one of the few Malaysia company that support internationally and then also have facility across the world. So this is one of the things that you should take a look. But of course, the property part is just focusing into Malaysia market.
Okay, very interesting. So finally, so luckily that today's company, Scientex, is also considered a company having businesses, global businesses as well. So hopefully answer EC's question. So now you have another company that has international business exposure. So yeah, I think here you look at the kind of plastic films, plastic products that Scientex is producing. So I think the first one, Chun Bing already mentioned, the stretch film. And then you also have your strapping band, your raffia string, so all kinds of plastic derivatives. You also have the FIBC bag, the big bags that usually found in construction and also manufacturing facilities. And then those heavy duty sacks, either as a gunny sack or those plastic derived heavy duty sacks. And then you have your plastic hoods, all kind of plastic that most of the people will use, be it end consumer or normal human being, whether you use at home or they also sell these kind of plastics to other B2B channels as well. So supporting other manufacturing partners and also their customers as well. So a very comprehensive array of plastic products that they have. So from films up to bags and up to strings, up to bands, everything, they almost have it. And here is just the breakdown of the manufacturing facilities that they have. So in Selangor, in Perak, in Malacca, and then in Vietnam, in the USA, and also in Myanmar. So this is very, very big plastic manufacturer. And if you compare against the Malaysia other competitors, I would say that other competitors might be relatively smaller size compared to Scientex. Of course, the products might differ. It differs from SCGM, which we previously touched about. But usually, for plastic manufacturers, if you remember last time we talked about SCGM, the boss said, no point for me to sell expensive, because if I sell expensive, I am actually giving opportunity for competition to come in, and then with more competition, it will be even tougher for me to do the business. So they will only set a low benchmark, a low profit, and the most efficient one will actually survive throughout the entire competition. So, but the good thing about Scientex is not only they are excelling in Malaysia, they also ventured out, and so far it has been a very fruitful expansion to Vietnam, USA, and also Myanmar as well. And of course, they also have a sales office in other parts of the world like Australia, Japan, and Philippines to get more clients and get more customers from all around the world. So maybe I'll pass back to Chun Beng to talk about the other important pillar of Scientex Berhad, which is the affordable property development.
Yeah, so like what I mentioned, if you focus on the gray area is where Scientex have their footprint in, and then majority of it is actually focusing in the southern part of Malaysia, which is Johor, or specifically in Johor Bahru. And then the second biggest is actually in Malacca. So all this while they have been focusing into affordable housing, and then you can see majority of the range is actually below 200K. And then they have the target to actually hit 50,000 homes by 2028. And this goal is still on track based on their plan, which is quite ambitious. I think usually listed company is profit oriented, but then if they are into all this and make a promise or something that they wanted to achieve, which is bringing some value back to the citizen or back to the society, I think all this is quite something quite encouraging. I mean, quite respectable for this company.
Yeah. So personally, I think I have passed by one of the Scientex project in Johor, and it was just surprisingly good. So I mean, the whole township was quite well managed, well drafted, well planned, and then just nearby every Scientex, especially the Johor one. So if you are looking at a Scientex project or a certain project at a certain place, just nearby, definitely there's also public amenities like your place to go for food. It's nearby also some place where you can pick up a sandwich. So it's all very well thought of. So I was quite impressed that you are able to make affordable housing projects so convenient as well. So you can have affordable and also convenience lumped together. So that was one of my impressions when I actually passed by one of the Scientex housing projects in Johor. So I think let's move on to the numbers. So we have seen how the company grew its plastic business just from Malaysia as an origin place, and then out of Malaysia. And then they have the money and they have the capital, and then they just went into property development, and also property development has been a fruitful endeavor for them. So you can see revenue as of the latest one, they are roughly 3.5 billion, and the profit is roughly 544 million. That's a PBT, profit before tax. So after you net off the tax, you get around 390 million, and the gearing is surprisingly very low. So this company is not a company that has a lot of debt. Later we'll go through more detail on the balance sheet, and the earnings per share actually goes up quite significantly as well. So it's around a 13.5% jump. So moving on to the key figures on the businesses. So for packaging division, this company is selling plastic products or plastic packaging in metric ton units. So they are hitting around 295,000 metric tons of plastic products, and then they have 18 new extrusion and converting machines. So this is the company that when they actually can grow the business, they need to look to expand there's always the so-called predictability that this company is somehow going to expand as the time goes by, because plastic, if you think back, is a consumption-based kind of item, right? You tear open your wrapper and then you eat the content and then you throw away the package, and then the company, the food manufacturing company, has to use a new plastic packaging to package a new product so that you can buy it somewhere down the road also. So it's a continuous consumption kind of product, and this is one of the key kind of business that actually allows businesses to scale faster. So if the company manages to sell more products, automatically they're going to buy more packaging, and automatically Scientex is going to hit more revenue. So for property, it's a little bit more challenging in the sense that now that the company goes to property, they have to buy land. You need to build your house onto a land, right? So we have to look at the suitable strategic land that once needs a bit of skill, but once you have it, you can actually acquire the land bank, and then build your house. You have to also do the so-called planning, township planning as well, all those kind of things. And then once you have it, you have to sell it, and you have to ensure that the housing project that you're pitching or you're selling to the public is actually has a lot of selling points. It's going to be strategy, it's going to be near to school, blah, all these kind of things actually will actually ensure whether the property division of a company or any property company can actually excel in this kind of business. So maybe I'll let Chun Bing go through the nitty-gritty numbers. Which one is the more profitable one, or which one is the stronger pillar, whether it's the packaging division or whether it's the property division?
Yep. So if you can see, right, the biggest number that probably will catch your eye is the 43.2. So for this particular financial year, they did very, very well because when you see an increase of about 8% in terms of revenue, but then the profit itself actually has a huge jump, come from a couple of reasons. Of course, one of the a few key one is actually some consolidation of how the manufacturing line are being performed, and also in the past few years there has been having a few acquisition activity going on. So but then those is under not under this operating profit lah. So but the key thing is it didn't have a very specific reason that spell out what is actually under this huge jump. It's quite general, talking about better consolidation in terms of human resource and so on. But then you can see if you compare between the plastic industry versus the property industry, for property industry, the operating profit is actually not too bad. So this is one of the key highlights that you can see, because although it's not linked, but then the new venture they are coming into, it's not new venture lah. I mean the newer division they are in is actually bringing them into a slightly higher margin gains. But of course, when they consolidated both division, it's not very, very high. It's hovering about 10 to 12% in terms of margin. But then if you look into property division specifically, it's quite lucrative lah, in a way.
Surprisingly. So I just did a bit of math. You look at the fiscal year 2020 numbers. You take this 251 million, divide by this 2.551 billion, you can get the operating profit margin is just roughly 9% only. Whereas if you compare the property division's operating profit of 298 million, you divide it by 967, you get around 30%. So quite a very high margin business. But of course, as Juming said, if you just do a weighted average between the both division, you get the bigger net profit margin of roughly 11%. Later you get it. We'll show the net profit margin trending as well. So this is a company which has a very solid and proven track record ever since back to the year 2001. So when a company is able to show you, see, this is 20 years of history or 20 years of track record, and they dare to put it in their annual report. You know, you're not coming against a conman company or whatsoever. So, but of course, you can argue that as the company goes bigger and bigger, it will definitely face some slower growth percentage lah. Because once you reach a certain size, it will not be that possible to grow at 20%, 30% every year compared to a startup, right? But what the company is showing us, yes, seriously, I was small, but I managed to grow my business by double digits. But now, over the years, even though 2008 there was a financial crisis, I managed to still grow my profit. It got impacted a bit. It came down from 47 million down to 37. But the subsequent year, 2010, yep, I managed to recover back all the shortcomings during the financial crisis, and it was just a very nice growth story up till the year 2020, as of this year. So this is a company that has seen a lot of challenges, a lot of crises happening, and yet as today it's still standing. So you can argue that it is big, but one way to see from the other side of the coin is that this is a company that has a very solid and proven track record, that it would take a lot and a huge challenge to actually put this company into some serious distress lah. So there you have it. If you just take the property and the packaging division and you just do a weighted average of the profit margin, you get around 10 to 11%, and the company's revenue has been growing ever since for the past few years lah. But I want to maybe pick Chun Bing's brain a bit. Maybe any opinions or any comments if you want to add on to Scientex net profit or even the revenue growth.
I think what they are trying to do from the company perspective is in terms of their core market, which is plastic industry. In one of the comment, you also can see it's quite famous because for this company is the one that every 2 years then they will acquire a new company and then keep on expanding their product line. And one of few good signal is they are trying to acquire a company that is slightly down or lower stream. I think the recent acquisition back in 2019 is a company called Daibochi, which is slightly lower, downstream, that can actually allow them to catch up with margin. Why this is important is because every industry, you tend to start off. You are the first one or you are the first few guy into the market, then you can get a good margin. Then people, wow, this business is easy to do. Not easy to do, can do. Then a lot of people come in, then eventually become red ocean, become very, very competitive. But what keep Scientex growing is their way of doing acquisition, going downstream, and eventually they running out of way. They go and start off another division. They bring them higher margin game. All these things has been proven in the past 5 or even you can compare it down to 20 years. It has been working lah. So this is something that is very, very impressive. But then the key thing that might not be bringing you, might not excite you, is no matter what they do, they are trying to maintain the margin at about 10. Okay, now you can see it about 11.5, but it will be hovering that. Not like all these sexy other technology company that can go to 20, 30, or even 40s. So this is the sad truth. Even though the company is strong, doing a lot of acquisition, bringing good result, but then this is just a sad truth that prevent them from going much bigger.
Yep. So I think Chun Bing, you raised a very good point. So yeah, I think when you talk about how KayaPlus, how we analyze companies, straight away we zoom down to the businesses, and sometimes the business you are in, the condition of the business or the company that you're in, it's just sudden. Sometimes some things are fixed already. So this is a company which maybe also is following a same theory or same understanding as SCGM. we are in a plastic packaging business, it's easy for people to actually compete with us, right? Basically, you just need enough money, enough capital, you buy the right machine, and then you buy the raw materials, and then voila, you have another competitor or another plastic company. So if all these plastic companies suddenly charge high price, then you are actually giving signals to other companies to actually join your party. So one very good example that we can all see is a lot of companies recently, they also want to start to venture into growth business, because suddenly during pandemic, growth companies all really making solid money, and the profit is not just 10-20% increase, it's more than that, it's a 3-digit increase. So you have companies who have previously no experience in growth making, suddenly they are also want to enter this kind of lucrative business. So when you have this kind of opportunity, you're actually going to crowd out the supply, and then once the supply actually outweighs the demand, then you will face some serious price issue. In the short term run, yeah, you will not see anything. People will still say like shortage. But in the long run, once the pandemic is over, once you have more growth factories compared to growth users, so what would the implication be? So I think these players, or these plastic packaging players, they already have the so-called intuition that rather than let people crowd the supply space, we set the bar. This is the amount of profit that we're going to take. If you want to be more efficient, come and join us. We'll see who is the more efficient one. So this is a kind of business where efficiency plays a very important role, which is very different compared to tech. So once tech, you have the IP, you have the foothold of how you control a lot of things, then yeah, you can just charge whatever price that you want, and people will just can't even come and compete with you. So business model is very important. So now we will venture into the balance sheet of Scientex. So you can look here, strong, sturdy company. The assets has been going up, particularly contributing from the total equity. And total equity, if the company is earning money, the retained profits will actually push up the total equity and also push up the total assets. That is relatively small in amount, just hovering around 1 billion plus. And then yeah, and you see that the gearing ratio that we previously show you is just 0.25%. So this company is not heavily into any debt. And even if they are, I think the current business where they are just supplying plastic packagings, that one will actually help them in terms of cash flow. So even if you look at to the cash flow statement, very straightforward. If your profit can grow, theoretically, nothing bad would happen to your operating cash flow. And once you have your operating cash flow, it's just up to the company how they want to grow it. Either they want to pay out a dividend, or either they want to do some expansion. So on and off, you can see the investing cash flow portion goes higher, but they can justify it by I'm investing into the company's future, the company's growth, and sure enough, every year the operating cash flow of the company is on the increasing trend. And this company, I think, quite generous when it comes to dividend as well. And if they don't pay you dividend, they actually will pay you bonus share. So I think historically they have already done a few rounds already. So yeah, can grow business and also quite generous in the rewarding into shareholders. If you are patient enough and have hold this company for like more than 5 years, then yeah, definitely you'll see some good returns lah. So now that we've talked about how the company has provided us a 20 years kind of track record, of course, when we invest for the future, we invest for the so-called any catalyst that can actually make this company outperform its current trend. So what are the prospects of Scientex, Junbing?
Yeah, I mean, in terms of plastic industry, it's quite hard for us to say I'm being innovative. This is like one of the kind of product, but then you can't. So the biggest prospect in terms of, for this company is for something related to affordable house. As you can see, this property division also bring higher margin to them, and with this pandemic going on, and also the success of a few affordable housing in the city area like Rumah VIP and so on. So I think this will continue definitely. And I think very few property developer brand themselves as the king inside these affordable housing areas. So when going into this, definitely they will be one of the few being picked. So I think this is very promising in the next few years. The next one is something that has been practicing throughout the year within the plastic division. They keep on doing acquisition. I would expect it will continue to do that, and this is one of the key things to keep them competitive and without losing the margin percentage.
Okay. So yeah, I think when the news actually came out that they actually acquired Ibochi, that was a very good news in my opinion, because once you reach a certain size and if you cannot grow organically, it's time to actually grow by doing some acquisition. So Daibochi was one of the more well-managed food plastic packaging companies. So that was a really good sign. And I actually like the management for actually having that kind of action to actually grow outside of the outside of their current capability as well. But this company is not a company without risk. For every company, when you invest, you are actually weighing or balancing the prospects and also the risks. So what are the risks of Scientex? What can go wrong for Scientex?
So I think the area that they still didn't manage to crack it through is the industry they are in is always relatively low margin. Even though property is one of the things that managed to crack up to 30%, but if you see throughout the year, it's not always this lucrative. And in terms of weighted average, if you see from that perspective, weak margin is always the killer when you want to consider to invest into this company. But of course, the next one will be pandemic because they are in manufacturing line. It will impact their schedule of coming out with the next cycle of product release and so on. So it will come, especially now a lot of infection happen within the foreign workers, and case is hitting historical high in Malaysia. All this will definitely impact the manufacturing activities. So we cannot expect more, but of course, within FY 2020, they are still performing quite well. But who knows what is the next impact that caused by pandemic.
So yeah, I think pandemic suddenly becomes a serious concern again. I mean, if you zoom back the years when we started not so late night show, it started when we had a peak pandemic last year around March, April, where total lockdown across a lot of places. And then Malaysia became one of the places around the world that actually recovered and showed very good prospects and potential in getting over it. But then, yeah, as of now, suddenly we are back to not just back to square one, but things are looking a bit more gloomier. But so pandemic actually will play a huge risk cut for Scientex, particularly in the construction and the property development. If the government really wants to go hard on again with a tough and a hard MCO, so projects like construction will definitely probably get put to a hold again, and that would actually impact the upcoming quarterly results, especially for the property development side. So who knows? But yeah, I just think we just have to be more careful, be more alert, be more attuned to the news, and sometimes being well aware of what is happening actually will help you make more better and well-guided decisions, especially when it comes to investing, because you just don't want to make the wrong move at the wrong time, and yeah, you just screw up your investments. So I think one of the more important parts is that after going through the company, the business, what we like about the business model, what we don't like about the business model, what is the prospect, what are the risks of the company, last but not least, is always about valuation, and valuation can be very subjective. So you're looking at as of today's closing price, Scientex is trading at around 15 times PE ratio. ROE percent is around 15%, so not too bad for ROE. And CAGR revenue growth is 14%, profit 19.8, maybe due to a better operating expense control. Dividend yield, because of the high share price, you're looking at roughly 1.9%. And they even have a dividend policy of 30%. So 30% of their profits will get paid out regardless. So good times, you get 30% of a higher earnings paid out as dividends. And if times are not so good, if the company still makes money, you still get 30% out of it as dividend payment. So maybe Chun Beng, is 15 times PE fair or good for a company like Scientex? In your opinion?
When I first look into this company, right, then this is one of the few company that will show you the 20 years of result and tell you they are able to double it up every, let's say, 3 years or 5 years. I mean, double up in terms of net profit, not revenue. So it's very, very impressive. But then you see, usually this kind of company, their PE should be high because people have a lot of expectation. But surprisingly, their PE is always ranging about 10 to 15. I would say 15 is considered high already in their history. Most of the time is 10, 12, 13, and so on. But then on another perspective, people say, if you see the historical stock price, it's actually growing very, very well. I mean, of course, it got corrected and then it come back.
Yep.
I would say the good part of this is a very predictable company, and hence why the PE remain relatively constant in a way. Because even though PE is 15, you know next year he will make another, let's say, 10 to 15% growth in terms of net profit or revenue. Then your share price will go up if you maintain the PE. Because PE is against your earning. If your earning go up and you maintain the PE, then the stock price need to go up lah. So for example, so this is why this is another way to see it, because we did a lot of session on technology company, which is very high PE, and you don't know when it will collapse or whether it can justify or not. But sometimes, or a lot of time, you still maintain 40, 50, or even hundreds kind of PE. But for these cases, PE is relatively low, but because it's predictable, earnings still follow. I mean, it's in uptrend from a year-to-year perspective. So in terms of capital gain, it's not too bad. You can still get it if they continue to do the same thing, have the same momentum. I think this is why not so sexy in terms of PE, but it actually can bring you capital gain. Because a lot of people say, well, PE high, maybe this company is a company that can grow very, very fast in the next few years. For example, Tesla can go up to 1,000 PE or whatever, not lah. Used to be negative, no PE until 1,000 PE, or people have so much hope into it. Yes, this kind of company, maybe in a few years they can justify back the PE and drop to hundreds or even 50. Usually this kind of company will attract a lot of people coming in, but might not bring you the actual returns because it might go up, go down, you don't know. But company like Scientex is different, predictable. Net profit keep on going up. PE maintain means you are getting capital gain already in a way. But you can expect 2 times, 3 times, 4 times. It might not be, but it's stable. So this is my key takeaway, which is quite different with a lot of companies that we cover, especially in technology sector.
True. Yeah, I think I echo your sentiments. So this is a company where the business model is quite predictable. We all know that plastic consumption will always be on the rise until one day where we suddenly become a bit more conscious of the so-called recyclability of the plastics that we use. So right now, it's just got plastic. We use plastic because it's cheap, right? But of course, there are a lot of plastic companies that also started initiatives as well to actually make their plastic films or plastic derivatives to be recyclable and more friendly to the mother nature. But as we all know, plastic use, even though it's on an increase, it will not grow exponentially. You won't suddenly next year you start to you personally, even as an individual level, this year maybe you go to the supermarket, say for example, every week you go one time, and every week you buy 2 plastic bag worth of groceries. So if you take 2 times 52, so every year you use roughly 100 pieces of plastic bags. So assuming if you don't get married, you still stay single, and you still eat the same quantity of food, you still buy the same quantity of food, every year you still use 100 pieces of plastic. So yeah, maybe you have other people who actually graduated, come out and leads the same lifestyle as you. Single man also go groceries, and every week just use 2 pieces of plastic. So yeah, it will just grow at this kind of rate. It will not suddenly I will use 4 pieces of plastic film or plastic bag every week when I go to groceries. So that kind of situation will not happen. It will grow, but it just will not grow at an exponential rate. The business will not fly that fast, and hence is a bit more predictable, and that's why you get a PE ratio of roughly 15 times. Personally, I think, yeah, this is a kind of PE I think is fair. I won't say it's expensive, judging just because the company is quite fairly predictable and has been having a very good track record for 20 years. So 20 years of track record, that one you cannot diminish, you cannot disqualify. It's a good company, it's stable, it has seen through a lot of calamities, and it has survived the 2020 COVID as well. But yeah, if you are someone who is looking for something more exciting, more sexy, more risky, then this might not be the company for you. But if you are someone who does not like too much risk, then maybe you should dig deeper into Scientex risk, see whether the downside of the company is a huge concern of you or not. If not, then yeah, we wish you the very best. If you study this company, if you like it, yeah, go ahead and strategize your purchase if you want to. So that's about it about Scientex. A very good company in my opinion, one of the good companies in Busan, Malaysia, and hopefully having a good company as the first episode of this year's Not So Late Night show would spell good things to happen for 2021. Because as of right now, I don't see anything good happening yet for 2021. But okay, let's go through the questions. Okay, yeah, I think EC's first question was current valuation of Scientex against T1. So let me check T1's PE is how much.
Day is about 11 to 12.
Yeah, you see, it's roughly that. You maybe get Scientex a little bit more pricey valuation because Scientex ventured into the affordable housing project, and that one gives them a higher profit margin. So now Scientex will be growing at 2 verticals, your plastic packaging and also your property. So if someday property managed to outgrow at a faster rate, then the earnings potential of Scientex will actually have a tendency to go higher compared to pure plastic companies. T1 is also not pure plastic, but just that I don't think they have a supplementing business vertical that has such a good profit margin versus their main bulk, which is the plastic packaging company. So you want to pay 4 times more for a company that has 2 solid verticals and property having a stronger profit margin contribution, or you want to just stay on with the cheaper option, but not so sexy vertical to complement or to support the plastic packaging. So I leave that up to you, but basically Scientex is more expensive because there is a reason to it. Okay, next question is also by EC. Yeah, I think this one you also answered already. So just out of the blue, I can just pick 3. I think they are more than that. Nestle Malaysia, even though it's a Malaysian company, they also do a bit of export as well. Just like the export portion is not that huge, they still rely a huge percentage within the Malaysian market as their main revenue contributor. So what are your best and worst stock selection in 2020? Good question. Let me check my portfolio. Out of the mine, after I did my tabulation, right, my best for 2020 was actually Disney. So Disney, I bought Disney when Disney was actually very low, when the pandemic in the US was actually at a peak. And at that time, one of the so-called trump card that I thought Disney have is that, yes, if pandemic is not over, definitely the theme park operations will get impacted. But if you can see Disney, they're actually pivoting into digitalization. Disney Plus will be the next competition to Netflix, to Amazon Prime as well, and also all the other online streaming channels. So that one is still, personally for me, is still something that has not been recognized or factored into the share price. So I think after that, Disney actually got up to around 50, close to 60%. So yeah, so that was for Disney, and also I think another one would be Retrox lah. So tech company actually never lose steam or never stayed back or got impacted. In fact, they just accelerated and they just keep on reporting better results as well for the year 2020. My worst one would be for, if you're talking about just purely 2020, right, I think it would be just for Sunread. Yeah, so Sunread was one of the companies that did badly. If you look at Sunread, because that they are so well diversified in terms of their property investment business. So in this case, property investment too diversified is not good. So one of the key segments within Sunread is their office building. So when people start to work from home, or you have this work from home culture, and during the pandemic, REITs was actually give some rental support to their clients or to their tenants. And sometimes during bad times, business go bust as well. So if your clients or your tenants fold up your business and then nobody rent from you, then you will see some adverse impact to your rental business. So Sunread was actually down when I actually bought it before the pandemic. So yeah, thank you for picking my brain, and thankfully I actually consolidate my portfolio into one Excel sheet where I can track it. So Darren has given his opinion. Scientex acquire competitor to grow bigger. Is it? Yes, you are right. As of recently, you just shared, Scientex actually acquired Daibochi, and it's a complementing kind of acquisition. Daibochi also is in the food packaging or plastic kind of business. So there will be more synergism when you do this kind of acquisition, or you expand by buying other competitors as well. So I think as we slowly go through the questions, let me make another small advertisements. If you guys are interested in our first ever monetizing premium content, you can go to the link, register there. It's just 88 ringgit for the entire year. This is not subscription. This is a one-time off. I will not be charging you subscription when it's not a subscription. And we will be having this 2-day sharing session at the end of the month, which is the 30th and 31st. If you cannot make it, I won't review it also. The entire session will be recorded, and you can play back the recording anytime you want. I think we will actually save the recording as well. So if you are registered, you can catch us live. You can also ask us questions live. But if you cannot make it, the recordings will still be saved. You can revise, refresh, rewatch it as many times as you want. It will not go public. And of course, if you still have any questions, you can come to us. We can actually answer your queries as well. So hit on the link and register. And we look forward to seeing you there. So personally, you will also get a report, a PDF report. So each stock is roughly 1,000 words. So I'll be writing around 10,000 words. I'm still currently writing it. And it will be personally our opinion of these 10 stocks, 7 Malaysia stocks, 3 US stocks that we think that 2021 would be unpredictable, but some business model is predictable. Just like Scientex business model is predictable. And these companies, these 10 companies that we think that the business model is predictable, and even though pandemic, if it were to worsen, there would be little to no effect, or the effect will be actually cancelled out by different companies. Say, for example, company A is a recovery stock. If pandemic improve, company A would benefit. But if pandemic worsen, you have company B and C actually supporting companies A business model if the pandemic worsen. So this is our strategy when we actually pick the 10 companies to actually share with you guys. So thank you very much for sitting through the advertisement. We continue back with the questions. So yeah, straight away there's someone asking about another MCO. Jumbing, any companies that you think would be greatly affected or benefited if this question were to be pitched to you?
No, I think in terms of this, it won't cause a shock to majority of the sector because we have went through once, and the company that is heavily impacted, some of it will have ventured into different in the industry, pivot into a different area. So I wouldn't think there will be any biggest loser in my opinion. But I would say the one around, as in the stock that is with the team of HSR will have a bigger hit in the recent few weeks. HSR stands for, I think, high speed rail, which is recently cancelled. Cancelled by, not cancelled, I mean didn't manage to proceed because of some disagreement between the two countries. I think this one will cause a more direct impact if compared to another MCO. MCO, I think, sort of immune already in a way. Of course, it impact the production of manufacturing, but then it will just means that the thing will be accumulated and then it will be outperformed in the next quarter. I think some of the company show this kind of sign. If I'm not mistaken, K Power is one of it that accumulate all the sales, stuck at the port, cannot go out. Then suddenly it got a boost in the next quarter. So, but if you see it from an entire year perspective, it will maybe slightly impact, but then it will go through.
Yeah, I think personally, if you look at the current situation in Malaysia, right? Yeah, I think pandemic is getting worse. I mean, the cases have been increasing, but I think okay. First of all, the virus is mutating, right? They say that the strain is getting more easily to spread. The virus is more viral. But one thing that we also tend to mislook is that yes, the virus did evolve, but our ways of going through life during the pandemic also evolved. Last time when we were so scared, we were so phobia about the virus, we totally had a tough hard lockdown. But even now, 2,000, 3,000 cases, there's still no hard lockdown. People still go to work. Some of us still go to our offices. You have your team A, team B arrangement, but we still go to work. You just wear masks, and then we still go to the mall. We still go to our groceries, even though cases have been increasing. So it's really how we adjust to life post COVID-19, or even during COVID-19. We have evolved as well. How we also approach life also actually evolve. So maybe there won't be a hard lockdown. So it's just maybe at the end of the day, the government and also personally, we think we have come to a certain kind of pattern. Okay lah, go out, can still go out, just wear mask only, and and don't go to too crowded places. So this is the kind of justification sometimes we give ourselves, and sometimes the government also wouldn't want to go through a hard lockdown again. So I think someone just mentioned that Scientex is his favorite company. So from this quote, I think you are a low risk kind of investor. You have a tendency to get attracted by companies which have a very solid track record. So I think Darren also gave a very good point. As we all know, plastic or any plastic derivatives, the raw ingredient actually comes from a component from crude oil. So once crude oil comes, you just do a little bit of fractionation. Part of it will go to petrol, and then some of it will actually get reprocessed into plastic components and be used as raw ingredients for making plastic packaging. So global oil price will definitely hit hard on the packaging as well. So another question you might want to ask yourself, if global oil prices goes up, can Scientex pass on the high cost to the consumer or to the clients? So can Scientex knock on the door of, say for example, Nestle? Hey bro, global crude oil prices has gone up, so I have to charge you more on the plastic packaging that you're buying, say 2-3 months down the road. Are you okay with that? So this is also the kind of questions that you want to ask. What if Scientex cannot handle the raw material acquisition or the raw material fluctuations, and then they lose out to a competitor? Then suddenly sales will get flow to their competitors. So this is another thing you have to check when you want to invest in a company which has plenty of competition. So hi Queen and Lee Jonghui. One of the things that plague the investor now is actually the hiking of resin prices. I'm afraid this will affect their margin in incoming quarter. Yeah, I think right now, if you are working in any commodity related business, you'll notice that a lot of things, the prices just shot up. So be it freight prices, be it crude oil, be it palm oil, everything is going up. The global supply chain is in a little bit of haywire, and prices of commodities has been going up for a lot of commodities. Sugar, I think cocoa prices also going up as well. So it's a bit crazy currently. So yeah, question you should ask also is what was the worst resin price historically, and how did companies like Scientex cope? So even in the worst kind of raw material cases, they still can book a profit, and will that actually flow and justify that even this round resin price will go up? Can Scientex actually survive and pass on the cost of these higher costs to their customers as well? So food for thought, some homework to do before you actually thinking of invest in Scientex. General question, any idea why SC have this RSS, IDSS beside earn profit? Because who doesn't want to earn more money, right? And personally, I think it's good to have RSS and IDSS. So for those who don't know what is RSS and IDSS, RSS means regulated short selling, IDSS means intraday short selling. So short selling is an activity where you sell a stock first, hope that the price come down, and if the price come down, you buy back, and then you just actually earn the price differences. So normal investors, we actually buy when the price is low, and then company does well, reports good result, share price goes up, and you sell, then you capture your capital again. So regulated short selling or any short selling mechanism is that you think the share price is too high, the company is worth lower, so you just sell it first, then the share price drop, and then you buy it back and you close off the position, then you also get the price difference, which is your profit. So previously, only people can buy and bet for company to appreciate in value. So now people can actually bet for the company depreciate in value, and Bursa can earn more money. So why not, right? And it means that there is more, more control and more fair. So if a company is so good, nobody want to sell it, then the price will keep going up and up and up and up, forever up. So these are companies like Nestle, forever, like you and me, if we haven't got it, chances are we are not going to buy it because it's so expensive per share. Nobody is going to short the share from 100 plus down to a little bit more affordable prices. So RSS and ISS, in my opinion, is a good initiative to actually make the price more affordable for value investors like you and me. Only price go down, then it's attractive for us to buy. Okay, Hanafi Basri, what is your opinion on the current situation of property market in Malaysia? Since this is this in a way a sector that Scientex is in. Maybe I'll let Jumbing answer first. How or what is your opinion on property industry in Malaysia?
If I mean, regardless, the way Malaysia grow the way Malaysia grow the economic activity is always focusing into a few big cities, Klang Valley, Penang, or Johor, and it didn't seems like there will be a huge change with this kind of style. So with this, more and more people will go into big cities, and then land will getting scarce. So this is why property keep on increasing the price over the years. And now when pandemic hit, all those things, the only difference is you won't be able to buy so lucrative or luxury house, but then you go for a more affordable one. The next one is maybe there will be more long units or whatever, not that make you can buy the house. So regardless, it will be recovering. In my opinion, it's just matter of time. Same goes to bank industry. I think back in March and then even go to June, nobody want to touch bank stock. They say moratorium, all those things is causing them a lot of impact. But then end up when there is a small signal that economy is recovering, then this kind of stock come back. And you know, they are predictable, seems like Scientex. When it goes down, it's very easy to tell this is undervalued based on the historical performance. Same goes to properties in a way. But then, of course, I would say affordable housing should be the big focus in the next few coming years. So Scientex definitely into the right place, in my opinion.
Yeah, I think you pretty much sum it up. If I want to add on something, is that personally personally only this is just because when I invest in companies, I always look at the business model. How do I put it? Property for me is still considered quite asset intensive. Basically, you need to source your raw materials. You need to have good connection with the material companies, be it your steel bar, rebar, cement, bricks, all these kind of things. And then you also need to have a dedicated workforce to actually build up your projects. And land is also one of the concerns. So your company has to not only be very good in acquiring land bank, they also need to be very good in the designing, planning the township, and then after that, they still have to sell it off to sellers. So there are a lot of ambiguities from the start of a project or from the start of surveying the land bank up till finishing the project and selling off to normal people like you and me. So there is a period of ambiguity there. Unless it's a very reputable developer who has a good track record in developing good projects, then you can lower the risk, lower the so-called negative assumptions that could happen during this ambiguity period. Because you can see that in Malaysia, there are also a few incidents where during construction or during property development, something bad happens, something collapses. So this could also have an impact on property development companies if the property development company is not so well managed. So fortunately for Scientex, they are, but these are the kinds of concerns that you should factor in when you want to invest into a property company. And for me, it's just too much ambiguity. So personally, I just don't fancy that much lah. So, but sometimes it's good to, do a bit more assessment and then do a bit more risk analysis. And if you're more comfortable, then yes, property development companies can be very cheap. And if you buy it right, then there is also quite a little bit of capital appreciation if you time your purchase right as well. What do you think about the prospect of open seas? Chun Bing, any comments?
Not really, because not very familiar with a lot of details. Probably we can look into it lah, but I wouldn't comment now. Yeah.
Yeah. So from a briefly chat, it's a software company. Yeah, they label themselves as a tech company within the software, and their solutions is in cash processing, check processing, bill payment, and also monitoring and services. If you talk about money kind of processing, I need to dig deeper. Firstly, I'm not familiar, but just from a rough guesstimation, if the company is just purely doing what they are stating here in their website, right? You have to think of the risk lah. So is this company going to be a beneficiary when digital banking comes up, or when Malaysia slowly migrates to be more intensive when it comes to e-wallet usage? I mean, as of now, a lot of us are quite heavy or quite heavy e-wallet users. Chun Bing, are you a very dependent e-wallet user, and what kind of e-wallet are you using?
I prefer e-wallets because no need to keep the change, and I can track what I spend. But I mean, which e-wallet to goes to, I think it's very subjective. It depends on whether they come with cashback, come with special gamification that you spend more, get more point.
Yeah. So as we also as we slowly pivot towards a more digitalized kind of spending habits, so maybe you should also ask yourself, if we don't cover OpenSeas, is this company going to be beneficial to the upcoming trend, which is e-wallet, this kind of spending habits? If yes, what is there for you to look for? Who are they coming against? I mean, there are a lot of competitors in the e-wallet segment, right? What is their benefit, or what is their strength? Can they be more advantageous compared to their peers, or compared to their competitors? So these are the questions you need to ask. But if just purely looking at their current solutions, I don't think, just personally it doesn't really jive with the way that we are heading towards. Maybe they have something up their sleeves. We might need to study further to come up with a more conclusive opinion. So Michael is asking, what is the talk about? If you are referring back to the Stock Plus 2021, so the talk will be about 10 companies that we are positive of in 2021. It will be 7 Malaysian companies and 3 US companies. They are from various segments. They are from the tech segments. They are from some staples, some very protective and resilient kind of business model as a protective layer in the portfolio should the pandemic worsen. There are also some recovery stocks that we think would benefit if the COVID pandemic were to improve as in general. So yeah, this would be the overall. We'll talk about what is good about a company, what is not good about a company, and then the not good part, we justify why the not good part or the downside of the company is well mitigated, or there are measures that the company is currently doing to actually ensure that they do not fall into a tough situation. So yeah, if you're interested to join us, you can sign up at the link in the comment section. It's just 88 ringgit for the whole year. Just one time off 88, not every month. So Darren, of course, thank you for your opinions and sharing as well. Thank you for bringing up that resin prices will swing heavily with the crude oil prices as well. I think they are going into solar also. So yeah, as we change into a more energy friendly or green energy advocate, US president, you will see that a lot of green energy companies are already showing some price movements, signifying or maybe signaling that good things are to come. So, but for Malaysia companies who are very project orientated, sometimes the price move faster than the news, and it becomes very speculative. So it's up to each and every one of our risk tolerance. If you are comfortable and you think you have the so-called information to make a judgment, by all means, do your due diligence and make your own decisions. But yeah. So I think there's another concern or another opinion on Tiguan. Their price have been taking a beating lately, approximately 30% from peak. Tiguan.
I think it's some form of correction to compare. It's not really from the peak. It shoot up very fast as well.
Yeah, I think Tiguan was one of the shares that previously it shot up because there was some positive news on I can't remember, maybe it was pandemic related or vaccine related lah. Correct me if I'm wrong, because I don't really follow the Korean news that much. So when this kind of thing happen, it either goes up very fast and then if it doesn't materialize, then you come back very fast as well. So there are a lot of examples in the share market already. I don't think Tiguan is the only one. I think the other one that we can also say that, oh yeah, why the share price come down so fast? Another good example would be Solution. Solution was one of the beneficiaries of the vaccine, right? So it also came down drastically from one ringgit 90 cents down to current one ringgit 15 cents. And apart from Solution, who else I can think of? I think there are a lot of it. What was the AT, one of the so-called Goring stock as well. Yeah, they say they were going into glove making. It went up as high as 20 plus cents and then it came back down to 15 cents. So these are the things will happen if you want to go into high volatility stocks. I'm not saying that the companies are not good, but sometimes the price runs too fast ahead from the fundamentals before even things materialize. So there will be this kind of risk. Sometimes you trust the management too much. They say they promise they will do something, and then in the end they face a roadblock. Things didn't materialize, and you are holding on to a paper loss just because you were too positive on the company, right? So at the end of the day, it's not how positive the management want to portray the company, it's how we investors think the company will grow or not. If the company has a 20-year track record and the management say that, okay, I'm going to go to Indonesia, I'm going to build a new plant there. Do you believe me or not? 20 years track record, yes, at least there's some justification for me to believe because he has 20 years of track record. If this company, for the past 5 years or 10 years, they have nothing achieved, suddenly they come and say, I'm going to do this. Do you straight away believe in the management or not? So these are the kind of questions we should ask ourselves, because when you invest in a company, you invest your hard-earned money, right? You don't want, of course, we want to earn money, but we don't want to get carried away by promises that cannot materialize, right? There's a fine line between selling you dreams and selling you a reality. So you need to actually look at who is the management of the company, what is the company's track record, and is the management someone you can trust or not. You might not know the person in real life, but from the way he talks, from the way you backtrack, because annual report every year they will say something. So this year is 2021. Go back to 2020, go back to 2019, see what they talk in the annual report and compare it to current day. Is this the same direction that they're heading to, or back then they just try to sell you some fancy dreams and then in the end things just didn't make out and didn't work out. So these are kinds of due diligence check. We KayaPlus do. even for our top 10 upcoming stock plus stocks, we also do the same thing. So we read through it. Personally, out of these 10 stocks, I think most of them, I think 7 or 8 of them, I think 7 of them I already have it in my portfolio, and I'm happy to hold it further. Even though that prices have gone up, I'm still positive because the management and the business is right, and they just need to maintain what they are doing, and then sometimes come up with a few surprises that are venturing into other exciting prospects that can even grow the company further. So these are kind of things we do. We share with you guys every Thursday, and I hope that you guys actually take a bit of learning every week. I don't waste your time every 1 hour for Thursday nights, and I hope that it's a beneficial session for every one of us. We also get to learn from your comments and from your sharing as well. Michael, yes, I consider myself an investor. I don't even trade now. I hold a very high discipline to not trade, because the moment I trade, I will be destroying my investing aura. Yeah. So investing aura is very easy to get destroyed. Once you have greed, when you have too high self-confidence, then you will crumble. So yeah, you see, this is the kind of session that is good about KayaPlus. You see, Michael is sharing with us a little bit of the so-called information that he has. So from an analyst, that Tiguan missed their earning target last quarter because their new production line did not get started in time. And the new line is running now. However, the price has yet to recover. So yeah, if that new line can grow the business at a very good growth rate, perhaps you should look into it and justify whether this sell down or this correction is a good price for you to actually consider taking up Tiguan. So true. Is Stock Plus 2021 webinar a record session? Yes, it will be a live plus record session. If you have the time, you can join us live. If you are not free, fret not, you can rewatch the recorded session. Even if you are live, if you miss out some important information, you can also rewatch the recorded session as well. Easy, next week topic. I don't know. Any suggestions? If you have it, let us know in the comment section. Oh, wow. Just the first episode of the year, we are running ahead of time already. So any more questions? If not, we will try to end this session. And it's been good to see you guys after 2 weeks break. And as always, just stay safe. I just don't know what would actually happen to Malaysia's COVID situation. There is no sign of things improving. And there's just a lot of negative news coming out every day. Hospital space not enough, blah, blah, blah. So it's all very gloomy for the Malaysia healthcare. So just do your due diligence, do your good part, practice the SOP, stay safe, don't mingle in crowded areas. And we see you next week. As always, the same time, 9 to 10 p.m. And let us know in the comment section what kind of companies that you want to cover. D-Pharma, Cotra. I think we briefly covered a bit of the pharmaceutical companies when the vaccine news came out, which was roughly around October. So yeah, maybe if there's no option, yeah, one of them might be an option. But yeah, if you are watching this on not on a live session, you can also drop us a comment in the Facebook or YouTube channel. So yeah, finally, thank you guys. It's great to see you, and let's hope 2021 is a good year for every one of us. See you next Thursday. Bye bye.